Hello everyone, today is Friday, June 17th, 2022. My name is Evan. Welcome back to another edition of Stock Market Weekly, presented by the Trade Risk, where it is our job to break down the most important trends, price action, and noteworthy moves across financial markets. If you're brand new to this video series, first off, welcome. Thanks for tuning in. We break up our analysis into two parts. In part one, we look through the numbers, we pick apart everything that stands out, looks different, interesting, notable. And then in part two, we jump into the charts. We take a look at price action in a very detailed, closer look, and the bigger picture market trends, try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's jump into this week's video, but actually first, I do have some exciting news that I want to share with you. We are opening up a wait list to a new premium version of this Stock Market Weekly video series. So we're still sorting out all the details, but like the thinking right now at a high level is sort of the following. We've published over 600 episodes for free over the past 5, 6, 7 years. And I do not want to take down the series, paywall everything, and just kind of end it for paying subscribers only. What I do want to do is create a free version of this video, a more brief version. And in fact, we get requests for this often. These videos are too long. Let's make them shorter. Let's make them more bite-sized. Let's get to the points quicker. And I respect that. And then I get plenty of other that just say, you know, go deeper, give us all the analysis, give us the good stuff. I don't mind listening to like a 30-minute, video if there's enough interesting stuff to talk about. So what we're going to do here is we're going to continue to publish a free version of this video to our YouTube channel, exactly like it has been. It's going to look a little bit similar to part one of this video. It's probably going to be about 10 minutes long. It's going to be roughly half the length of the full extended version, but it's going to get you all the important stuff, the moves that are important, the trends that are maybe changing or developing, and just get you that focus list. And then for those of you who want to get more into the nitty-gritty price action analysis and some of the cool new scan screens and layouts that I've been working on behind the scenes, I'm going to sneak peek a few of them later in this episode, then the premium version or this extended version is going to be for you. So head to thetraderist.com/waitlist. It's just an email list that you need to drop. You can leave some feedback if you'd like. It's not going to be super expensive by any stretch. I want this to be like a cup of coffee per episode, maybe a nice cup of coffee per episode. That's it. Not trying to break the bank here, but to support the show, support the development on it, the data feeds that we pay for, and then try and just keep it as curated, tight, and actionable as possible. So that's the exciting news. thetraderist.com/waitlist. We've got some new screens, some new things we're going to be showing you a little bit later in this video. And if you're curious or if you want to just, again, be first in the know here, then drop your email there. Let us know you're interested, and feedback certainly is welcome. So that's it. Let's jump into a very busy episode. I have a feeling this is going to be a long one. I'm going to try and talk quick. There's a lot to go through. There's a lot of themes I want to kind of hit on here. So let's get into it. First off, we had the Fed hiking 75 bips. That was what we got out of them. Market initially liked the move, and then we saw the sort of turnaround Thursday where we started to make new lows. We had the new equity market lows being made this week. It was OPEX week, so we had, the monthly option expiration. There were a significant amount of volumes or notional dollar values expiring this week, so that was interesting. We'll see how we come out of that next week after the options have settled out. The key, a couple of key things here, a handful really. We didn't see any sector spared in this week's selling. I think that's what felt a little bit different this week. We had every sector in the red, and every sector pretty deeply in the red. We're going to talk more about that later on. That was a significant number of 52-week lows. We'll talk about that. Energy trade looking like it wants to roll over here. We're going to look at that in part two. ARK So ARK is sort of the poster child here, or at least that's what I'm calling it. I think that's what, frankly, most people call it for the big tech growth trade of the past several years. That did not make new lows this week. Now, it doesn't mean it can't make new lows next week, but that was at least interesting and notable. And we got some signs of life out of biotech. So we got a lot to cover here. Let's keep moving. Don't know why that's in there again. I went backwards. Okay, here we go. So stock market performance numbers on the right-hand column. This is the weekly performance. You can see it was a really ugly week out there. 5 to 7.5% selling here across all the indices. You could see the Nasdaq 100 clearly the relative performer, Russell 2000 underperformer, and international stocks, world stocks, doing pretty well here as well. Again, well is super subjective and extremely relative here because this is still a pretty horrible number. Let's take a look at the trends here. As you can imagine, we're basically at new lows here for this year, for this cycle. So everything is declining. Short, medium, long-term, simple moving averages. So basically your short, medium, long-term trends, everything is down, no change there. If we take a look at the volatility environment, as you could imagine here, we did rise this week. So both the S&P Vol Index and the Nasdaq Vol Index both jumping about 3 points. S&P is back above 30 VIX. Nothing good happens over a 30 VIX. That's just the real simple kind of heuristic you need to know about. There is dangerous times when the market is over 30. Nasdaq Vol has been hanging over 30, frankly. It typically does trade a little bit more of a premium to the S&P. It's trading up around 37, again, extremely elevated levels. Let's take a look at our drawdown monitor. So let's take a look at this middle column here. This is the maximum drawdown this cycle. Again, I like to put this in here because it helps us just establish some reference points and just understand sort of where we are and, you know, how far we've come. Because again, these weeks are extremely busy, and you know, we get stuck in the weeds of the day-to-day action. So this is at least helpful for me. Everything made new lows this cycle this week. So S&P 500, we're at a 24.5% drawdown. Look at the Nasdaq 100, got up to 34.16%. The Russell 2033, World Stocks 24. One standout here is, I will say, for the Nasdaq 100, this is now the largest drawdown for the Nasdaq 100 post GFC. So we are currently in the largest drawdown we've seen in 12 years. So that is, again, not to say that it can't get bigger, but again, giving you context on the magnitude of the selling that we've seen thus far. This is a study I was running. I actually don't know if I ended up tweeting this out or not. This was just some different things I was playing around with and some analysis I was doing here. This is looking at percentage of S&P 500 stocks. So all 500 stocks. I think there's technically a little bit more in there right now, but all 500 stocks, looking at them specifically and looking at how many of them have had 5 consecutive closing days in a row. This was of Tuesday. That number hit 47%. That was an extremely high number. I noticed I didn't include the date on the bottom, but this is back here in COVID times. Basically, you can see just a very, very extreme reading. And we've got a couple of charts here that were just essentially illustrating the magnitude of the selling we saw this week. And I think it was quite extreme when you look across all of these different metrics. If we take a look here, that's right, utilities, I wanted to touch on this. I mean, look at this drop here in utilities this week. Now, utilities isn't an exciting sector, but this is going to show that there was nothing spared here this week, right? None of the defensive areas of the market were immune to the selling. You can see if we look at ATR moves, this was well over our normal bounds. If we take a look at the weekly chart of XLU and how this finished up, take a look at this again off the charts here in terms of the magnitude of the move or the range in the move this week. So that certainly notable. Take a look at energy. Energy here has been the leader effectively this year, or it has certainly been the trade that has been working to the upside. And then take a look at the magnitude of the selling that we saw this week as in relation to the past couple of years. Now let's take a look at 52-week highs and lows. Take a look at well, there's certainly nothing to see on the highs column because you're basically getting single digits, nothing making new highs here. This is remarkable dry up of number of stocks. Usually you get even a little bit more than this because defensive things are working or heading higher, or gold miners or something. But then take a look at the lows here. We got heavy triple digit numbers. And then on Thursday, we even got over 1,000 here for the number of stocks making new 52-week lows, for a total week summation here of 3,422 stocks net making 52-week lows here. It's a very significant number, and something that is getting pretty close to historic sort of washout areas where we tend to see markets get a good reflex bounce when you start to get this much of an extreme washout, everything getting sold off. So that's something to keep on your mind. If we take a look at sector performance here again, look at this right-hand column. Nothing is spared this week. Consumer staples, healthcare, and financials, they were the top three performers. It's still down 4 to 5%. So again, you really couldn't hide anywhere this week. And then take a look at energy, just an absolute decimation in that space here. Again, it has been very, very strong and just posting some extremely strong numbers, but this is one of the biggest moves it's seen, as we illustrated in that previous chart. It's seen in a very, very long time, and just gave back, about a month or so, or 2 months worth of gains. So very big losses there. Utilities and materials down 9 and 8% respectively. Let's take a look at correlations here. So this is, again, about as bright and correlated as you're going to get. So the brightness of the green and red here just basically illustrates how strong the correlation is. And what we're basically seeing here is, again, all risk assets trading in lockstep with one another. So essentially everything's treated as just risk. Take a look at even Bitcoin down here, which is interesting, right? Look at the correlation. Again, this is a 10-day correlation, very, very, very short term, but essentially Bitcoin just being treated like a Nasdaq stock. That's basically what it's looked like over the past 10 days when the fear has stepped into this market, when the selling has picked up. There is nothing that is being spared this week. Everything is getting sold off effectively. And then take a look at the inverse correlation here to the United States dollar. That is an extreme correlation, and the same thing with the 10-year Treasury yields. So you know very clearly what narratives are driving the market action this week. Take a look at Treasury yields. Speaking of them, you can see they were up pretty sharply this week. So we've got a 10-year yield now back up to around almost 3.25. It's a little bit off of the highs. It did not close at the highs of the week, but still we saw rising rates this week. We, again, didn't close at the highs, so we're going to talk a little bit more about this in the second half of the video as well, but still on the move to the upside. And lastly, dollar and commodity here. You can see the dollar index did get a rebound this week. It was up 40 basis points. Everything else here on this screen was down. So agriculture ETF here, DBA, was down 1%. Silver, gold 1 and 2. Crude oil down 7.5%. That's a big move. Same thing with natural gas. Big move there, 20%, and Bitcoin down 23%. So commodities also now getting slammed. So that is the roundup there. Before we get into part 2 of this video, where I've got some more cool data sets to show. This is our current positioning here. These are the two fully rules-based quant trading systems that we run. And our top system here now 21% invested, might have been the same as last week, I believe, or maybe that increased a smidge. But that is equity exposure, so it does have a little more of a foot in the door, but still 80%, basically cash. Short-term trading system, big difference here. This is 100% invested right now. So this is very much looking for a bounce here. It was doing a lot of buying here in the second half of this week. It is not out in the crazy risk spectrum, frankly. It is looking and invested in trading more of the sort of defensive areas of the market. So it's not, out there trading, small cap, biotech or anything that volatile. So notable though is just the increased exposure here, up to in fact 100% right now going into the long weekend. So much more details on our website about these trading systems. I get asked about performance reports. Everything's posted every single month. We post performance reports with the exact numbers, net numbers, including, commissions and anything else. So everything's up there on the website, traders.com/performance. You can see that. You can take a trial. You can learn more about the trading systems. So with that, we'll be back here in just a second with part 2. All right, here we go. We're back with part 2, and we are looking at a chart of the S&P 500 cash settled market, and this is Warden TC2000. So let's begin our journey here as we usually do, looking at a daily chart of the S&P 500, and this is sort of the roadmap. This is what we've been marking up here over the past several weeks. And so basically the price action we saw this week was contained entirely underneath this band here, this band that we've had drawn on here, this 3,800 level, 3,830 or so. This was approximately the May lows. That's what got us that nice bounce up into this nice tight range. And then very textbook, certainly in hindsight, we saw the breakdown, we saw the gap down follow through, and then this Monday we came into the week with just a harsh gap down again and a drop entirely below this support area. So we effectively broke down from yet again another support area in the context of a downtrend. So when we look here at the price action, is very dismal looking, frankly, right? We are below another support area. We're closing towards the lows here. And from a trending perspective, everything remains down. So that's the high picture here. And so first and foremost, if this is, not your environment, if you're a long only investor, if you're an intermediate longer term investor, then there's no change in trend here, and there's really just nothing new to do. We've got volatility above 30. We've at pretty much new lows, and that's what we're in. Now, for you shorter, active, and more tactical traders, there may be some more opportunity brewing. So as we sort of alluded to and showed in the first part of this video, we are getting to extremes in a variety of different metrics and indicators, basically showing that we're getting to a fairly capitulative sort of state. First and just easiest way to look at this is, let's just draw right back here very simply from 7 days ago. The S&P 500 is down 12%. I mean, that's a big move for, one of the biggest markets in the world, frankly, or market cap weighted indices. 12%, 7 days, that's a lot of selling. Secondly, if we were to throw on Bollinger Bands here just on the weekly chart, take a look at how far we are extended below the lower 2 and 20, 2 and 21 Bollinger Band right now. It's pretty stretched, right? And again, when we look just historically here, markets, don't like to spend a whole lot of time below this, and they tend to get that springboard back out. Obviously, there's crash modes like we had in COVID, but here we are, pushing a pretty good distance below it. Take a look at the number of consecutive red bars right here of volume, and what this is essentially corresponding to is just down weeks. So we've just seen all of these down weeks here in the S&P 500. Yes, we did have this one big up week right here, this 6% up week. So that was certainly a no joke type of reflex bounce, but then it just went right back to more consistent selling. So, frankly, if you look back since the very first week of April, or I guess the first full trading week of April, we have effectively been down every single week except for May the 27th. So again, there are lots of indications here. We can look at breadth. We can go underneath the hood. We can look at the new 52-week lows. There's lots of indications here that this market has seen an extensive amount of selling here. So what that means if you're more short-term and tactical, again, speaking to those types of traders specifically, is you'd be looking for some type of counter trend rally to ensue here. And it starts by, what I always look for is just taking out the prior day's high, right? So if we can come in Monday and start springboarding above 37, what did we get to? 37.07, and we can start getting back up, over Friday's highs. then that's at least a start. We put pretty much an inside session in here on Friday, bit of a doji. So if we can start lifting above there, that could fuel something. Now, more interesting or more significant is ultimately getting back over 38.30, right? If we can reclaim a support area, get back over this zone and start to, diminish the lower lows and lower highs that we've seen in here, then that's more significant, and that would be the bigger move. And that's going to be, about a 5% rally above where we are, kind of come back in and start filling some of these gaps. So that's, again, optimistically, or a roadmap, a counter trend roadmap, or the bullish roadmap would be, let's get above Friday's highs. Let's try and hold above there. First step is a baby step. And then let's see if we can string together a couple of, sideways to up days here, and then attack this 38.30 area. That's what I'd be looking for. So you got the very heavy volume on Friday. Again, it was OPEX, but that's about all we have. I mean, otherwise you're just playing in this downtrend here. And again, when you're just 1% away from highs here, if we can't hold above Friday's highs, right? If we come in gapping down, or if we come in sideways, then we would expect new lows to be made in the context of a downward sloping trend on short, medium, and long-term time frames. Let's take a look at the Nasdaq 100. We've got, slightly more optimistic here in the Nasdaq 100 because it performed the best out of the major indices. We talked about that at the start of the video. Again, if we look at this weekly chart, we can basically see just every single week except for that 1 week here has been down for the Nasdaq 100 since the first week of April. So once again, we've got that consistent, persistent selling. If we look at a Bollinger Band here on the weekly chart, again, we are below it, not quite as below it as we did. And notice we do have a bit of a tail here on the bottom. And if we go to a daily chart and we plot how far below we are from this significant support we just broke down from, it's only about 3.8%. So what this is leading us to believe here is that if we do see some type of reflex bounce and we do get some type of counter trend rally to ensue, it seems likely the Nasdaq 100 is going to lead the charge here. That's where I'd want to bet, for or play for the reversal. Would be looking at the Nasdaq 100. Again, let's see if we can get above, the prior day's highs. Let's first off, and then let's see ultimately if we can get above about 285 here in the Nasdaq 100. That's what I'd be looking for. So that's kind of the roadmap there. Similar, a little more optimistic. If you go to the Russell 2000, you get more pessimistic because this was down the largest this week. Again, below the lower 2 and 20. This broke the May pivot here at 169, but this one has, just generally speaking, had a slightly different formation that this one that the Russell 2000 has been in. It's been really the better performer throughout the month of May. We were talking about how it was more grinding to the upside here, but as of recently now, it is really sort of lost that spot, and it seems like it's trading places with the Nasdaq 100. So when I look here at the Russell 2000, I would say over 170 is a pretty good start here. And again, it's only a few percent from that level as well, about 3%. So if we can start getting above 170, reclaim this May pivot low, then we're in at least a tradable spot where we can start managing risk and start not just being in an intense downtrend. So that's really the price action there across the board. And let's talk about some other areas of this market. So first off is oil. We look here at oil. Let's go to just the daily chart. And you can see that oil is starting to see this reversal. You saw the volume pick up here on Friday. Again, it was OPEX, but notably what we saw with oil is that we got above this March peak here. And again, we're looking at the USO ETF. This is different. If you're looking at the futures contract, I think technically this traded up in the 130s, I believe. I forget the exact spot WTI price, but I believe we didn't take out what we made for highs here in March. But because this is a USO regular trading hours, 8 to 5 days a week. This is the chart we're looking at here of oil. So what we basically saw, though, was, an attempt to get back over this March peak, and then we sort of failed here. And that's an interesting failure spot, is when you get above a prior high and then you can't hold those highs. That usually gets you an oops into the other direction, and that's kind of what we're seeing here. So it's going to be premature to say that's it for oil. It's over, and, down we go back into the 60s, 70s for USO, but we're going to take it one day at a time. I'm imagining people are probably going to come in and try and buy this up, and I'd be more interested to see if this can get a higher low put in, and then if it can rally back up to 80 or 90, can it hold up there? Does it then put in some type of, lower high and then roll over? That's going to be the tell I'd be paying attention to. Let's next look at IEF. So this is the 10-year Treasury bond. And what you'll notice here is A, the volume that's picked up this week, and then B, the fact that we closed well off of the lows of the week. Now, we can look at interest rates here, the yield of the 10-year, and you can look at this in this view here. And so we got up on Tuesday was the highest print we saw, and then we basically traded down throughout the rest of the week. So again, it's still a tricky spot. We're still in a very strong uptrend. We're still above the May highs. If we start losing the May highs and we start to see interest rates, continue to kind of come down, that would support the Nasdaq trade. That would support that tech leadership, and that would support probably a higher equity market or that bounce. So one step at a time. We're not there yet, but that's what I'd be paying attention to. TLT can basically do the same thing. We're off of the lows. We saw a nasty gap down on Thursday, and then take a look at how that essentially that session progressed. Is it just bought up basically all session? So TLT, on watch there for continuation bounce. And then the dollar very interesting this week as well. All these big key markets certainly had some big influential moves this week. We saw a heavy volume coming in. Take a look at the weekly chart of the dollar. So this is the heaviest volume we saw. Again, this is the UUP ETF. There's other ETFs. There's obviously all the individual spot currencies you can pairs you can trade and look at against each other. But certainly this week we saw a heavy volume. It came at a very significant spot, which is the prior high. And then you can see we got this big indecision kind of candle printed. So again, the dollar at an interesting spot here as well. If it starts to roll over, if it starts to fail, if it starts to drop below the May highs, then that also would be a significant event here for basically everything else. Last but not least, in terms of the big structure, I want to talk about ARK. So ARK Innovation, we haven't really talked too much about it, but this is essentially the poster child for big tech growth. And this was one of the first things that really started to correct, certainly a lot later, but this is, really in the fourth quarter last year is, we saw the Russell start to peak out and everything else. And we started to see that breakdown in ARK around that time as well, is when we started to see the significant downtrend in place. So it was one of the first to lead to the downside. It's about 80% from its highs, which is pretty insane to think about. 75% from its highs at the lows, 78% from its highs. But notice this week, it didn't actually take out its May lows here, right? So again, it could, this is why I say, nothing's set in stone. This could easily just be some type of flag consolidation that does break down. But as of right now, while the SPY, while the Qs, while the Russell, while sector ETFs all made, relative lows or absolute lows in this cycle context, the ARK Innovation didn't, right? So we're starting to see a little bit of relative strength brewing here. We saw a little bit of relative strength out of the Qs, and then we're seeing a little bit more, if you take it one step further, relative strength out of here. So again, if the market is going to rally here, let's see if the ARK type stocks, right? It doesn't have to be ARK specifically, but these types of high growth stocks will be the ones to lead us higher. So it's something to pay attention to. Obviously, the context here is for active traders, people looking for trading bounces. This is still in a severe and major downtrend. So that, I think, covers most of what I wanted to. Actually, no, there is one other thing I want to talk about. This is some of the new work I was doing or wanted to present here. So if we take a look at the left-hand side, this is another view of breadth. And what I'm looking at here is a line chart of, if we look at the bottom first, utility stocks, and this is the percentage of utility stocks over a 50 SMA. And so this is, again, looking at the components, not looking at XLU, it's looking at everything within XLU. And what you can basically see here is going into the weekend, we have 0% of the XLU above a 50 SMA. And why that's significant is just the extreme drop we saw this week. This was at 80% of stocks were above a 50-period simple moving average about 5-6 days ago, and every single one of them is now below it. So again, you can kind of see that when you pull up a chart of XLU and you see the carnage and the selling that has taken place. But again, it speaks to what's going on underneath the hood. I think even potentially more interesting is energy, which, let's see, 8 trading sessions ago, 6-7 trading sessions ago, had 100% of its stocks above a 50 SMA. And as we go into the weekend here, we've got 0% of stocks. I'm sorry, this ticker's not moving. We've got 0% of energy stocks above a 50-period simple moving average. So again, this is sort of why the theme is this week is that no sector was spared. And these two, I think, were just some of the extreme examples. Again, this just goes to show you another illustration here of market breadth, looking at the components of the sectors. So just getting more specific. And I've got a lot more views here over the coming weeks in this new premium extended version of the Stock Market Weekly that we're going to be looking at like this, that can give us some clues as to where things are going. So video is pretty long here. I'm going to just end it with some of the sectors and industries of interest. I'm not going to go through these because I would be here for another 20 minutes. There's a long list, as you can imagine. And as you can see here, there's nothing that's notable on the upside this week. Everything from a sector and industry standpoint is notable to the downside. And because this list is so long, I don't know that it's that special. Typically when you get 10 names in this list, it's something you can actually, manageably look at. But with 75 names, it basically just tells you that the whole market was pretty horrible here. So you can see these names, you can pause the video, you can look at some of the industries here that are were notably down, and I think we're going to leave it there. So that's what I've got. Busy week, lots of interesting things going on. Obviously, lots of just ugly price action, but we're seeing some pretty interesting confluence of capitulation out there, or just extreme selling, which tends to come near those lows. So that's notable. We've got a extra we got market closed on Monday, so enjoy the extra time off from markets. And then don't forget to check out the traderisk.com/watch list if you're interested in kind of supporting the show, and then also, more importantly, getting the extended version, the more in-depth, detailed version with more of these advanced breadth studies and some interesting charts. Then certainly drop your email in there so you can stay in the know, stay notified, and just get on that communication list. So that is it for me. Thanks, as always, for tuning in. Every Friday, we do our market analysis video like this. You can subscribe on our YouTube channel or find us at the Trade Risk. Thanks again so much, and we'll see you back here next week.